Okay, here we are at the end of the trading day on September the 21st, 2022. And as you probably know, the Federal Reserve did increase the federal funds rate by 0.75% today, the highly anticipated number. Unfortunately, they did not want to increase it by the full 1% that I was kind of hoping for. But that brings the overall federal funds rate to 3.25%. Now, after the Fed chairman, Jerome Powell, makes his announcement about the change to the federal funds rate, like whether they're going to bring it up, whether they're going to bring it down, how much that's going to be, they go into a session of question and answer. And also there's written comment and written detail about the meeting that they had. And in that information is really where we're finding the details that we're looking for, because the increase of 0.75% was kind of anticipated. So the markets in general, especially the stock market, was doing very well early on in the day. And they actually closed down 500 basis points because of what was in the details of the comments. Now, he talked about the fact that they had been expecting the federal funds rate to go as high as 3.5% this year. He mentioned that now they're expecting to allow the federal funds rate to go up to about almost 4.5% this year, almost 4.6%, 4.75% next year, and that they don't really expect inflation based on the personal consumption expenditure to come down to the number that they're expecting until 2025. Okay, so that means that they understand they're going to have to restrict and constrict the overall economy for a while until they can get inflation down. And he said over and over that he will do what it takes to make sure that they get down to that 2% number. Okay, so that's why the stock market kind of felt like, well, that doesn't sound too good for business. So you started to see the stock market sell off later in the day. The mortgage-backed security market in general was up a little bit this morning here. You saw that on my early morning announcement. It was down almost 50 basis points when the announcement was actually made, but now we're starting to see, we're ending the day here pretty close to about down 10 basis points, and the 10-year Treasury is down 4 basis points, and that is good. The thing that we need to pay attention to is, what are they going to do in the future? And they talked about bringing the federal funds rate up a few more times. So we may go as high as 4.5% by the end of this year. So expect the federal funds rate to continue to climb in an effort to bring down inflation. Now, one of the things that he also announced that is very near and dear to you and I in the real estate world and the home loan interest rate world is he was directly asked if they are going to start selling mortgage-backed securities. And he said at this time, they are not, I don't want to say considering, but they are not going to be doing that. And the mortgage-backed security world, I think, really liked hearing that. While they talked heavily about inflation still being too high, they basically said, look, we're not looking to sell any mortgage-backed securities right now, which was very important to us. And that's probably why we're having some type of stability here today. Where are we on the actual 30-year fixed Brent Bruce Daily? Let's take a look here. And we were at what, 6.375 yesterday. And today we are sitting at 6.25%. Now, why would we have the interest rate go down a little bit today when you see up here we're down 6 basis points on the mortgage-backed security? Because yesterday I talked to you about the fact that they were going to kind of bake in a little bit of hedging just in case the numbers didn't come out the way they wanted them to. So they pushed the rates up a little bit yesterday, giving themselves a little bit of room. Now that the markets have heard the comments and they've looked at the adjustment to the federal funds rate, they're able to give a little bit of that hedging back because they're like, okay, now we know what they're thinking and what they're going to do. So they give that a little bit back and we drift down 0.1%. So let's take a look over here at where we are. If we were to spend a little bit of money here for $940, we're at 6.125. If you want to do a little bit over a half of a point, you're at 5.99. So, you're seeing the market move a little bit back in this direction. I think in the near future here, we will see interest rates continue to come down. That is my expectation. We'll see them come down a little bit here because of the resolve that we're hearing from the Federal Reserve to get inflation under control right away. And as you know, inflation is the enemy of mortgage-backed securities and home loan interest rates. We're going to keep you posted and give you more information as it comes out. Make sure that you like, subscribe, and share, and I will get back with you tomorrow.